Well guys, this probably isn't any new information to you, but the stock market is in complete panic right now. That's basically the only way we can put it. Yesterday's trading day was one of the worst in history, with the Dow Jones moving down just under 3,000 points in one single trading day. This is honestly something we haven't seen since even the Great Depression era. 2001 as well as 2008 is nothing compared to what we saw in one single trading day yesterday. And I wasn't going to be making a video on this topic today. I was actually planning out some new content for either Wednesday or Thursday, but because of yesterday's trading day, I just had to stop everything and make a video on this topic for you guys. And honestly, I was kind of reluctant to make a video about this topic today because I did address this topic in a video I made a couple weeks back, and since then my opinions on the matter haven't really changed all that much. However, because of yesterday's crazy trading day, I felt that it was kind of my obligation as a financial YouTuber to make a video on this topic and share my thoughts with you guys. So for that reason, in today's video, we're going to be speaking about what's happened in the stock market over the past couple of days, followed by what you should be doing as an investor with this current market situation, how you should be reacting and deploying your funds. And we're going to be speaking about how I'm personally reacting and how I'm deploying my funds into the market. And finally, we're going to be looking at a variety of different stock picks that you should be looking at right now for some ridiculously low prices. And also, if at any point in today's video you're enjoying the content and it's providing you value, then make sure to smash the like button. It really helps the channel grow. Hey, what's going on, savers and investors? I hope you're all having a great day regardless of how yesterday's trading day went. Hopefully today's video is going to help alleviate some of your uncertainty if you have any, and actually today's trading day is doing significantly better, so hopefully you're in a little bit more of a better mood. If you're new to the channel, well, welcome. My name's Griffin, and let's just get right into it for today's video. Yesterday's trading day was just brutal. Basically every single market, even on an international level, was down, with the TSX down 9.89%, the Dow was down 12.39%, and the S&P 500 was down 11.98%. Totally just brutal for one single trading day, especially considering that last day's trading week was down 4 days out of 5. And currently, at the time of filming today's video, the markets have not yet closed. However, we're seeing a much nicer day than yesterday, with markets trending green. For example, the TSX is sitting at 3.11% gain in the past day, as well as the Dow Jones sitting at 2.24% and the S&P 500 at a 3.27% gain, which is nice to see considering the fact that over the past 2 weeks, we've had pretty much no days that were trending green. Regardless of today's trading day, however, what we're experiencing right now in the markets is by far the largest panic in the stock market that we've seen in modern times, hands down. This is significantly larger than what we experienced in 2008 and 2009 in terms of a rapid decline in one single trading day. Same thing for the early 2000s. What we experienced yesterday and over the past week is by far the largest and most rapid decline in stock prices and the largest sell-off we've seen in modern times. But with all the information that's being blasted through the media and the internet right now, it can be pretty difficult to wrap your head around what the best course of action is as a retail investor with the current situation. So let's quickly speak about what my opinion is on the whole matter and how I'm personally approaching the situation. First of all, I want to address investor and human emotion in this entire ordeal, because I'm not just going to sit here and say that I'm 100% comfortable with what's going on and riding through this is a total breeze. I mean, of course not. Regardless of rational thinking and knowing that yes, indeed, over the long run, this will pass, and rather than being fearful right now, this should be an opportunity to be buying up positions while prices are low and securing long-term gains. This is much easier said in theory than in practice, and I'm not just going to sit here and say that this is super easy to actually apply to your financial situation when you're experiencing a 30% loss in your portfolio. Now, I'm personally continuously buying up positions each and every day that the markets are red. However, I did want to take the opportunity here to empathize with all the investors out there that are opening up their brokerage accounts and seeing 20, 30, or even 40% overall losses in their accounts. It's hard, and it's hard for me as well. All I can say on this front is the number one most important thing is do not sell your positions if you're in a 10, 15, 20, 30% loss position. You don't want to be materializing those types of losses, and you should just be riding through until the market markets recover, even if it takes a year or two or even a couple more years. You don't want to be materializing any huge losses like that, and they will recover eventually. If you're finding it too difficult to see such a loss in your portfolio, you might want to consider just turning your phone off and taking the day to do other things. This leads me into my second point, and that is that for most investors watching this video right now, 2020 is hands down going to be one of the best buying opportunities in order to create long-term wealth for yourself and grow your portfolio over the coming 10-20 years, because the prices we're experiencing right now for some positions being down 20, 30, 40%, these are rock bottom prices that you're probably not going to be seeing again for some of these companies. And if you're really serious about growing long-term wealth here, this is by far one of the best buying opportunities. The way I'm approaching the situation right now is pretty much twofold. The first one being that I was purchasing stocks a couple months back at prices that were 30, 40% higher than what they're trading at right now. And at that point, I was still confident with those purchases. I still thought that those specific picks that I was making were at an okay price. So imagine right now, with the prices being significantly lower, this is only a better time to be buying into these positions and materializing some long-term gains. Following that first point, other than the fact that some of these companies might be experiencing some reduced revenues over the coming months, it's kind of hard to say. Well, if you genuinely believe that these companies are strong, solid companies that are still going to be around in 5, 10, 15 years, then the prices we're experiencing right now from a rational standpoint should be extremely enticing. The second main point that I want to bring up here is that most likely the prices we're experiencing in yesterday's trading day are probably not going to continue dropping at the rate that we've been seeing it over the past couple of weeks, at least not by 20, 30%. It's obviously kind of impossible to say and extremely difficult to predict. No one can predict this. However, I really think that with the amount of scare right now in the markets and just media coverage being at worst case scenarios, I personally kind of find it hard to believe that over the coming weeks, we're going to continue seeing drops as we have. So in my opinion, the time to buy is probably going to be this week. And keep in mind here that unless you're investing in super volatile and risky stocks from the get-go, well, the current financial climate right now should not be all that much of a worry if you have some funds to be deploying into the market and buying up some shares as prices are extremely low, because you'd essentially have to be betting against these huge multinational companies going bankrupt in order to lose all the funds you're investing. So in my opinion, right now, if you get in, over the long run, you're going to see some massive wealth building in your portfolio. So with that said, my current strategy right now with how I'm deploying funds into the market, and is a strategy that you can utilize if you see fit, has been to identify how much liquid cash you have on hand and you're willing to put into the market. Once again, I don't think you should be deploying all of your liquid cash into the market. You still want to have a nice reserve fund of savings on the side, but the money that you have available in order to deploy into the markets, you should be looking at that amount and then dividing it up into at least, let's say, 5 or more days. And then every single day that the markets are red, you take one of those portions of capital and deploy it into the market by purchasing some securities that you see fit for your portfolio. And this way you avoid panic buying and putting all of your funds into 1 or 2 different securities, or just putting them all into a security on the wrong day and then regret later on. This also is going to allow you to benefit from dollar cost averaging, where you're able to get into some positions at different price points. But honestly, regardless of the price point that you get in right now, the markets have gone down significantly. So any price point you get in right now is probably going to be a winning price point. That's personally what I've been doing over the past 5-6 days. And once again, if you're in this for the long term, which I always recommend that you are, you should be a long-term investor, then it's pretty much impossible that you're not going to come out of this advantageous over the long run. All right, so now that we've covered that information, let's dive into some specific stock picks that are completely undervalued right now. And newsflash, pretty much every single stock that you go out and pick is going to be undervalued, or at least has gone down significantly and might be at a point right now that is more equally valued in terms of the actual value of that stock. But before we dive into that, if you're new to investing and need to open up an account, then make sure you check out the links down in the description where you can open either either a Questrade account and get $50 free in commissions, or you could also open a Wealthsimple trade account and get $5 instantaneously directly deposited into your account. So on that note, let's dive straight into the stock picks for today's video. Starting off with a handful of dividend stocks here, right now is an unreal time to be locking in on some tremendous yields on cost. If you're not sure how the price of a security has an impact on the dividend yield of a stock, then make sure to check out the video right here. But right now, at the current price that you can pick up some of the stocks we're going to be speaking about, the dividend yields are extremely high. So let's start off with a handful of bank stocks, as we're going to see right now. The first bank stock we're going to be looking at today is the Royal Bank of Canada, trading at roughly $88 a share right now on the Toronto Stock Exchange, as prices have gone up a little bit today, but overall this stock is down from $108 in February. And then on the New York Stock Exchange, we're looking at roughly $63 a share right now, with a dividend yield of 5.19%, because remember, this is a dividend aristocrat and is also Canada's largest bank, serving over 16 million worldwide customers. This is a company that shows increased revenues and bottom line year over year, and is going to continue to grow in the future regardless of what's happening right now in the markets. We're going to continuously see Royal Bank acquiring new clients and building their business over the next decade, I guarantee. Same thing for TD Bank, which has taken one of the hardest beatings in the past month, trading now at $56 per share on the TSX, down from $76 in February, and this has resulted in a now dividend yield of 5.74%, which, if you're getting in now and securing this position for the next 10 years, should prove to be highly profitable. In the same vein as Royal Bank, TD is one of Canada's top banks with operations also in the United States, and is a stable growing bank that, in my opinion, is going to continue doing well over the next 5, 10, 15 years. Pretty much all bank stocks right now are a steal and have crazy high yield, so do your own research and pick up your top ones. The next stock we'll be looking at is ALGONQUIN Power and Utilities, ticker AQN on both the NYSE and the TSE, and like most energy and utility companies, it has taken quite a beating in the 30% drop range over the past month, going from $16.61 down to now roughly $11.75, securing right now a 4.30% dividend yield. This is a company that has significant growing assets, and with the world leaning more towards renewable energy sources in the coming years, I honestly have no doubt that this company will continue to grow and explore new markets over the next 5-10 years. I personally picked up a pretty significant position of AQN and might continue adding it depending on how the stock trades over the coming days. And keep in mind that even though this is a newer company in terms of energy, it right now has around a 53% dividend payout ratio, which is nice to see. And finally, for the dividend stocks today, before we jump into some tech and growth stocks, we're going to be looking at Coca-Cola, ticker KO, which is a staple dividend stock for all dividend portfolios, in my opinion. Obviously, this is a company that's been around for hundreds of years and has their foot in so many different product lines and types that I have no worries. This is going to be a company that will be around in the next 10 years and will be thriving, and it's going to be easily recovering from what we're experiencing right now in the markets. And also keep in mind that people have been stocking up on most consumer good products, including Coca-Cola products right now, in the fear of missing out on them and not being able to go out and purchase any of their favorite products. So this is definitely a plus for this company. The stock has dropped roughly 25% from $60 to now roughly $46, resulting in a dividend yield of 3.52%, which is extremely nice to add to your dividend portfolio. Dividend stocks right now are obviously extremely attractive due to prices being lowered over the past couple of weeks, and for this reason the dividend yields have gone through the roof. And like I said earlier on in the video, however, pretty much every single stock that you're going to want to load up on right now is going to be at a major discount. So what I would recommend doing here for your dividend portfolio is look at the different positions in your portfolio right now and your core players, the ones that you really believe in and you've analyzed as being great long-term companies, and then load up on more of these. Chances are that the dividend yields are going to be extremely high compared to what you purchased them at over a couple of months ago. Next up, we'll be taking a look at some tech and growth stocks rather than just some dividend specific stocks, starting with Shopify, that's just taken taken an insane beating of nearly 40%, dropping from $543 to $355 in nearly 1 month. But as spoken about in the Shopify specific video, this is a company that is seeing explosive revenue growth, and it's the #1 e-commerce provider and is expanding into other areas such as fulfillment and payment processing. E-commerce is definitely the way of the future, and if anything, with more people locked up in their homes right now, all they have to do is buy stuff online, thus growing their revenues even higher. I think it's safe to say that at this price point right now, getting in is a total steal, and over the next couple of years, we'll be seeing the stock soaring again. Next up, this stock might surprise a couple, but it is Square, and this is by far one of the stocks that's been hit the hardest right now, plunging by nearly 50% in the past months, most likely due to retail being uncertain at this point in time. But remember that even though we're really moving towards e-commerce in the future, retail is absolutely not dead at all and still represents the large majority of both American and Canadian consumer goods sales. I personally believe that once the whole uncertainty has blown over and people are back in small shops buying stuff, I think as a long-term outlook and a long-term hold, this is a stock that potentially will see some tremendous gains over the long term. Currently, you can pick up shares for roughly $44 a share, down from $85 in February. Following Square, we now have Nvidia, ticker symbol NVDA, which is surprisingly jumped by nearly 10% today, but is still far off from their $315 high in February, which was down nearly 40% today from that price. You can currently pick up shares of this stock for around $215, and as one of the most influential companies on the whole gaming scene, which is doing nothing but explode and will continue growing for the foreseeable future, in my opinion, this is most likely a great stock to add to your portfolio for long-term gains over the next 5-10 years as the gaming scene continues to grow. Now, that's not to say that it won't drop any more than it has, but as a long-term buy and hold, the current price right now is extremely attractive. And finally, for today's video, we're looking at Microsoft, ticker MSFT, down nearly 25% from the February high of $188. This is a monster company that has consistent growing revenues and a tremendous balance sheet with massive amounts of cash on hand to make company acquisitions if they so desire. Especially with what we're seeing right now, depending on how the markets continue to trend, this might be an opportune time for a company such as Microsoft to buy up some smaller growing tech companies that are struggling to weather through this current financial storm. Over the coming 5 to 10 years, buying Microsoft at this price may very well be one of the best investment decisions you make. Now, obviously, it's pretty much impossible to accurately predict just where the market's going to be trending over the next weeks, months, or even years. But one thing that is certain is that the current market lows that we're experiencing are absolutely unprecedented, and for most investors might be one of the best buying opportunities in your entire investing career. If you've been watching my videos for some time now, then you're probably well aware of the fact that I, as an investor, am not really someone who's trying to time the market accurately. I'm more of a long-term investor who's looking to take advantage of dollar cost averaging. Case in point, I was buying stocks 6 months ago, 1 month ago, and I'm buying stocks right now amidst this financial climate. And there's one thing I want you to remember here, is that you shouldn't be trying to time the market and getting in at the opportune time. You should be trying to take advantage of long-term gains by dollar cost averaging. And right now, you can't really go wrong with any price that you're getting in at in any one of the positions that you personally screened and think would be a good addition to your portfolio. The last thing you want to do is sit on the sidelines and not take advantage of this, and then in 10 years look back and regret not getting in to this market dip. If you enjoyed the video, then make sure to give it a thumbs up and consider subscribing to the channel. We speak about a bunch of different financial topics here, from stocks, ETFs, and overall just stock market. We also speak about taxes, credit cards, and a bunch of other things. So if that interests you, make sure to subscribe to this channel, and then also make sure to check out one of the 2 videos right here if you want to learn more about how you can go about investing in the stock market as a retail investor. So on that note, once again, smash the like button, and thanks for watching. I'll see you in the next video.